Well, good morning, everybody. How is everyone?
Great.
Fantastic. Excellent. So this is kind of an impromptu. I was told that I was speaking today, and I was not here to be a table topper, so we're going to kind of shoot from the hip.
There you go.
So I'm going to give you a little bit of history on myself. I have been in this mortgage industry for 120 years. That's mortgage years.
Man, you look
which,
good.
Thank you so much. Which would equate to about 15 to 17 years in the industry. So. I love what I do. One of the best feelings in the world is being able to drive down the road of your local neighborhood in Huntington Beach and look at those houses and say, hey, I got to put someone in that house. So it's a great feeling, and you make a pretty good living doing it as well. So I started out in the industry with a small mom and pop broker shop. They gave me the opportunity to say, hey kid, you want to make $10,000 a month just coming out of military and college? I went, wow, 10 grand a month, that's amazing. So obviously, that's what they told everybody back in that time frame. So I started out as more of a gopher. I was getting coffee for folks. I was putting files together, and then they finally gave me a shot at taking an application. So I took an application, did my very first loan. Was nervous as you could not imagine because I really didn't know what I was doing. But the folks were happy with their loan, and the rest was history. So I kept going to school, finishing out college. As I was still working with the broker shop, we had the opportunity, my wife and myself, to move to Huntington Beach, where she was born and raised. And then I started with, of all companies, Chase. So I was with the Chase banking side for almost 2 years. I had an in-house relationship with a real estate company, and lo and behold, Countrywide came through the door and said, hey kid, how would you like to work for us? So I took a look at Countrywide. And was with Countrywide until they're exiting from the industry, and then went to Wells Fargo, or excuse me, B of A, because Countrywide was purchased by B of A. Was with B of A for almost 2 years. Did a small stint with Wells Fargo, and then went into correspondent lending. Now, the reason I'm giving you the history on this is because I'm not the type of person who jumps from company to company, but I've taken the good and the bad with every piece that I've been with. So I've learned from the broker side, I've learned from the federal lending side, banking side, if you want to say that, the red tape piece, and then of course correspondent lending. So where I am now, so I will let you know a little bit about Lend US. So Lend US is a subsidiary or a sister company to RPM. RPM has been known for a very, very long time. RPM Mortgage has been around. They funded about $28 billion last year. So, but the reason that I took the leap of faith and became part of Lend US is because I have basically my own branch, my own debt branch. So that means I manage every piece that comes in and out of the door. And at the end of the day, if we do a great job, that's great. If we don't do a good job, it's on me, right? So that means that it's my dollars coming in. But having the power of that investor behind you that is doing billions of dollars in fundings makes it easy for us. It also allows me to look at many, many different products, because the world that we live in today, people do not fit in that one little square, right? There's not too many people out there that have just a W-2 position, that have perfect credit, have no debt. Obviously, the majority of the folks that live in our neighborhoods are either W-2'd or they're also self-employed. So you have to get creative nowadays. You have to have many different ways to put people into a square or into a circle or into a triangle, okay? So what we specialize in? Well, probably for myself, primarily, I look at purchase money. Refinances are always kind of icing on the cake, if you will. So we're always looking for ways to put people into homes, whether it be an investment that they're looking at, extending their portfolio, first-time home buyers that are looking to get into properties. So what I would like to do is open it up for some questions, if you guys have any questions at this point, or I can keep on chatting. Mr. Mike Raines.
I'll feed you a nice question.
Yeah.
So the Fed just met, what happened?
Oh, excellent. Okay, so everyone always asks this question. So the Fed met, and they were talking about, when the Feds meet, they talk about increasing interest rates. Now, the interesting thing is, they're not talking about the bond market. They're not talking about the actual mortgage rates. They're talking about prime rates. Prime affects home equity lines. Now, it does affect other things as well, but that doesn't mean that the bond market or a 30-year fixed loan rates are going to increase. Now they did meet and they said, look, we're not going to be raising anything at this point. So we've had a very good market, even with the government shutdown, and honestly, with the government shutdown, it's helped us. We've seen about a 0.5% drop in interest rate, guys, in the last 3 days. So I had a client that was purchasing a home. We were originally at 5%. I got to call them yesterday and say you're now at 4.5%, right? So right now, if you are working with a lender, even if it's not myself, I would highly suggest that you get your rate locked in, because tomorrow we have a job report that's coming out. And they're telling us right now, lock before the job report. So here's the thing about job reports, folks. If the job report comes out, they always have an estimate before the job report comes out saying, okay, we think there's going to be a 10% increase in jobs this year, or we're going to see a 5% decrease in jobs this year. If it is negative, meaning that it was lower than what they assumed it was going to be, that's going to be great for me. It's going to be great for people that are refinancing or purchasing a home. If those jobs come out higher, then we're going to go ahead and see another increase in interest rates. So right now, our economists and the people that I listen to on a daily basis are saying lock ahead of this job report that's coming out, because they feel that it's going to be positive, which will be great for the economy, but not good for the bond market.
I think that's an excellent answer.
Well, thank you very much. Any other questions?
Well, yeah, you mentioned about creative solutions. So can you illustrate some of those?
Absolutely. So we have what we call stated income loans. We have what we call no-doc loans. So these are for folks that obviously, they make a good living. They have good reserves. They have good money in the bank, but don't necessarily show that on their tax returns. So for folks that are having, they have, majority write-offs like most of us do, we can take a look and see, based on their deposits that they're making into their bank statements, use that as actual income. Or we have an actual loan where it's called a no-doc, where we're putting zero income on the application. It's based on credit only. It is not based on doing any type of income calculation based on their deposits into their bank account. Now, they do have to have money in the bank. They have to be putting a minimum of 40% down. And it can also be used for investment purposes as well. Okay. So when we say creative solutions, yes, it's being creative, but obviously it's still staying within a term, making sure that someone can actually repay that loan. That's a really important word, right? We have to show somehow that someone's going to be able to repay this loan within that next 30 years.
Yeah.
Exactly.
Okay, any other questions?
Another question.
Yes, sir.
So for a young couple, and they're thinking, well, okay, I want to get a home, in 2020. What can they do now to prepare themselves for an easy loan approval?
Well, I think the best thing for us to do is when I'm talking to a client, it's all about building a foundation for them, right? So whether it's going to be a year, 2 years, 3 years down the road, how long it takes us to get them to a position. So typically what we'll do is we'll ask to review their tax returns, take a look at what they have in the bank, and then if we need to set up a plan, then we're sending them to one of our CPA relationship to say, okay, maybe we show that we're, next year, maybe not so many write-offs, or this is where we need to be, so we can set a foundation for them and say, based on what you're doing today, this is where you need to be. A lot of times, though, we can get someone into a home with as little as 3% down. There's products out there now for first-time home buyers where they can come in with 3% down and have no mortgage insurance. But it all has to make sense for them, right? A computer can tell me all day long that someone's qualified to do a loan. And loans really are just debt-to-income ratios. It's a number. But people are not numbers. So if the computer says, yes, you're qualified and we can send a pre-approval letter, well, that's great. But what does it take to put the savings aside? What do you want to do to, for the future, for yourself? How much does it cost to feed you? What do you need for clothes? How much does it cost for everyday utilities, that kind of thing. So that's really important for us. So typically what we try to do for first-time home buyers, we start out with budget. Where do you want to be? How much do you want to spend? And try to be realistic, right? To make sure that they understand this is a realistic payment and this is realistic what you would be coming in with when you're purchasing a home.
So it sounds like you're willing to nurture clients along their path to eventually qualifying, and that you work with outside vendors to do that.
Absolutely, I have an entire team, and I think anyone in my industry needs to have an entire team. This is not just a 10-minute conversation. Hey, you're ready to go in 30 days. So you get your loan and you're done. Now, for me, this is. Obviously, it's my career, but this is long term. Sometimes folks are just wanting to know what's out there. There's so many people out there that don't even know the loans that are available to them.
Yeah.
And it's getting someone to a position where hopefully they can be a home buyer.
Yeah.
So, yeah.
That's wonderful.
Yeah.
And tell us, you also have some experience with veterans, I know, and there's some.
Absolutely. So, veterans, near and dear to my heart. So that's probably one of my specialties is VA loans. I also have a program that is specific for, not just specific for veterans, but it is for fire, police, it is for veterans, of course, and it's also for some folks in the medical industry. So the program is called SoCal Heroes. What we do is we make sure that there is a discount given to, on the side of the real estate side and the side of the lending side, to any one of those heroes. Now, if you're putting your life on the loan, life on the line, not on the line, life on the loan. If you're putting your life on the loan, yeah. If you're putting your life on the line, that it is a larger discount. I do a minimum, absolute minimum of $900 discount towards their closing costs for any one of those heroes. So we also have a nonprofit that's tied to it, and every month we look for a family in need. I get calls all the time, we get emails all the time for a family in need, a hero's family, and we give back to that family, whether it be groceries or helping with bills or whatever it may be. So VA is near and dear to my heart. Obviously, I'm a veteran as well, so it's something that I specialize in. And any veterans out there that have not taken advantage of using their VA certification, absolutely take advantage of it.
Okay.
Yeah. All right.
Is there such a thing as a no-cost loan?
Is there such a thing as well? Okay, that's a great question. So there's always going to be a cost to somebody, right?
Yeah, right.
There's nothing in this world is
It's
free.
free.
So, but yes, there are ways to do no-cost loans, as long as it's going to be a benefit to the person who is doing the no-cost loan, right? So there is what we call rebates. There is always, well, there can be money on a tie to an interest rate. So let's say if it's a certain interest rate and there's a certain amount of credit, then that credit can be used to cover the closing costs, whether it be on a refinance or on a purchase. But on a purchase, the only two loans that you can do 100% financing on is a VA loan or what we call a USDA loan, which is rural area, which typically means you got to have, you got to be pretty far away from, your neighbor Tim, and you have to have, typically you have to have a well, and there's going to be, not paved roads. So, but you'd be surprised. There's a lot of rural area in Orange County. So, but yeah, do we do no-cost loans? One of the things that we do for veterans VA loans is what we call a VA no-no. It's a nice name for it, but what that means is there's no down payment and there's no closing costs. If I have a veteran and I can help them and I can still get them a good rate, get them into a house, and have them come in with no money down and no closing costs, I'm going to do it all day long. So,
Nice.
all right.
Very good.
Okay.
Yeah.
Any other questions?
No.
No? Okay. All right. I think that's my time. Well,
Yeah,
Jon
good
Shrum,
job.
US.